Hi there, Trace. This is Brad Gilbert with the FX Market Insight for the 26th of October. All right, the ECB's come and gone, and no surprise there, really, to me. Draghi stuck to his mantra that they are going to look to tighten next year, end of next summer. Now, the prospect was, I thought this is, Draghi's been very consistent, so the prospect was basically a bit of short-term euphoria. We see the euro sort of spike up 20, 30 points, and then drift straight down to the downside. And it's done exactly that. I'd say, if anything, I've got a little bit precious on my entry. Instead of using this sort of new downtrend line, I was working off the old support line, which is now resistance, and missed the entry by about 5 points. So just one of those hard ones to swallow. You know what's going on. You're very specific and just miss it. So anyway, so euros are sort of moving to the downside. Now, it is still moving down on all time frames. To me, technically, the euro is a nice sell, as is the US dollar a nice buy at the moment. Now, Brexit, there's still fears about a no Brexit deal. I just can't believe the rubbish that comes out of the UK media. So as soon as the deal is done, I think this is going to be back up towards 130, 131. The UK fundamentals are very strong. Inflation's high, wages are high, wage growth high, everything's high, except for Brexit. So we'll just have to see how that one plays out. Now, the Aussie and Kiwi, I know they're sort of just drifting, but a little bit lower, but they're pretty much trading sideways. And just have a look here. I just let the charts intentionally the way they are. So check out this is what geopolitical events do to major currency pairs. See the dollar yen here, a false break on the downside, false break on the top side. And what happens? It's back to exactly where it is. This is super typical of geopolitical situations. And you see even dollar CAD, there's still a very strong hawkish tone from the Bank of Canada. The market has sort of brushed that aside as well. Little spike to the downside. And we're back up to where it was around the release of the hiking situation from the Bank of Canada. So dollar CAD, bit of a in the too hard basket, I'd say. Sterling also. Euro is probably the best trading pair. And this comes back to where you should really be focusing. If I just bring across the MyFX Trading Hub, don't go looking for the hard stuff, right? This is, when I talk about the snapshot here, and this is for those new viewers, the overall snapshot is the fundamental and technicals put together. Now, fundamentally, euro is pretty static, sideways, but on all time frames, it's dropped down, so bearish sentiment there. The US dollar index is bullish, as is dollar Swiss. All these other pairs, sterling is going down at the moment, but it's just all on the hype of the geopolitics, so I'm not buying into that. But dollar yen, Aussie, Kiwi, dollar CAD, all trading sideways. So you don't go looking for those. Look for the pairs that have clear direction, okay? And there's three there out of the major pairs that you could be looking at. Now, I just come across to the dollar index. Now, it's having a nice, pretty nice week, I guess. So it's more on the back of weakness in euro and sterling than just general dollar strength. Although, there was all this hype about the US dollar safe haven because equity markets were getting hammered. Well, the equity markets bounced back yesterday. The Nasdaq up 3% and the Dow Jones up 1.6%. So that should put a bit of a green tinge across all global equities. They should all have a pretty good day. Dollar yuan, it's hit its lowest level in over a year and a bit, up at 96 somewhere. It's just trading sideways. This price action here, see how it's just slowly going up? The central banks and governments like this. What they don't want to see is a 10% depreciation in the currency. But this situation is going to get a little bit hotter because now the Trump tariffs have been in for probably about a month or so, couple of months. They should start to impact the Chinese system and their economic numbers, and we should see further weakness in the yuan. So the dollar should rally further against the yuan. What is that? That's creating a huge outflow of cash out of China, which the Central Bank of China and the Chinese government are very concerned about. So it's one of those things, like, to me, to fight the tariffs, the Chinese just let their currency depreciate. And that's the plan. But what they didn't expect is everyone who's got cash in China to get their money out of China. So now what they're seeing is a massive exodus of cash. So it's going to have that's going to be a bit of a balancing act for those guys. Now, coming into today's trading, it's pretty simple. It's exactly the same as yesterday. Like, there's been no change in the overall plan here. You know, with the daily analysis snapshot being pretty much the same, you're coming back to look at the overall opportunities here. Now, the next upcoming event is, we've only got one today. Well, there's the University of Michigan sentiment numbers, the final numbers. But to me, the focus will be on the US advanced GDP numbers. And with, you know, all the other sort of bits and pieces going on, Brexit, you know, the Saudi issues sort of continuing on, that's just going to diffuse itself. I don't think there's anything that's going to come of that. But so the US, we don't have anything to look at during the Asian session. Okay, keep an eye on dollar yuan. The European session is very empty of data, so it's just the US session. Geopolitics, so Europe will be dominated by potentially Italian new updates on their budget with the EU, and also Brexit is definitely going to be the main catalyst. So just be aware that those are random events, and that's why I've got the geopolitics dominating. Well, unlike the economic numbers, which come out at specific times, you can't determine when those things are going to impact or move. But to me, Euro, out of the European pairs, the Euro and the Swiss work in sync. So keep an eye on those two pairs. And that's pretty much it. So when you look at the whole trading day, well, you go, okay, well, momentum could come from advanced GDP numbers in the US. Outside of that, you're just looking for potential opportunities. And we did have the next best trade there. Just missed the entry there on Euro. I was looking for that slight blip up. We got that, but I was about 10 points short of getting the entry level triggered and then activated. So a bit of a disappointment there, especially when you miss the whole opportunity. And that's pretty much it, guys. There's not much more to do. If you're looking at the general news, just have a quick look across. You'll see that they give you a few explanations as to what's going on. Obviously, Sterling, Brexit. Saying Euro dropped because Draghi's determined with his tightening. I think what you'll find is that Draghi came out, he's been very consistent. Yeah, they are on a path or on a plan, but there was nothing new. Okay, nothing new means that's old news, and so the market sort of just sold Euro because it was already breaking down. 1 at 22-month lows. That's pretty much it. There's not much else going around. The dollar CAD, just trying to give you some sort of explanation as to why this thing isn't, dollar CAD isn't lower. Oil is still sitting around $67, and you know what? The market's just sort of scratching its head at the moment, sort of trying to work out where the next best trade is, and it's a little bit tricky at the moment. But I'll tell you what we do have. I mean, just keep an eye on those equity markets. I was just going to say, it'll be good to see those bounce. But one thing is just coming back to the MyFX Trading Hub. Next week, we've got a huge week of really solid numbers. It's going to be a really good directional week. We've got, especially starting with the US PCE price index, then you've got the Eurozone GDP. These numbers are weak. We're just going to sort of start laying into Euro. It should be at 110 within the next week or two. And then you come back down through the rest of the data. Big opportunities in Asia, as well as Europe and North America. So it's going to be big as well. Obviously, the Bank of England interest rate meeting, that's going to be a nice one, but especially with inflation so high and average earnings. No Brexit deal may keep those guys on hold, although I tell you what, they're going to go over the pump. They've got to start raising rates at some stage before they hit 3%. Or inflation hits 3%. But that's it, guys. That's it for me. So keep focusing on the path ahead. There's not much economic data coming out today. So, you know, what your main aim is when there is no economic numbers. Doesn't necessarily mean you don't trade, but look for the pairs with direction and look to get in. You know, that's, to me, that's a sell Euro on rallies, buy dollar Swiss on dips, and potentially the US dollar buying as well. That's it, guys. That's it for me. Have a good trade day. I'll see you in the live trade zone. Cheerio.